There is so much hype around ticker MSTY, the YieldMax MSTR covered call ETF. And I get it. The returns have been phenomenal. It hasn't been consistent, maybe a little bit, but there's a lot that goes into this ETF that I don't think people understand. One of the things being, can you retire on this? We're talking all about it today in this video breakdown on how much money would you have to have in ticker MSTY to match the average American salary. So I hope you guys enjoy this video breakdown. I love MSTY. I will say I bought some recently, so maybe there's a little bit of bias in this, but you can call it out in the comments if you want to. As always, I talk all about the YieldMax ETFs, the weekly paying dividend ETFs, and so much more. So don't forget, if you find that content valuable, to like and to subscribe so you never miss an update. Let's get right into the video, but first, we'll roll that intro. Ticker MSTY has been all over the place since the start of the year. I'm going to be using all the data for our year-to-date stuff for our calculations because I think it's going to show us, even with the fluctuations of Bitcoin and the price dropping overall of MSTY, how profitable this ETF can be. So it's not going to be based off the entire history of the fund. I'm just going the last couple of months. Now, one really important factor with this, of course, is the price of Bitcoin, which relates to this ETF because it's writing calls on MSTR. And if you don't know MicroStrategy or Strategy, how they call themselves now, they are they're kind of like a Bitcoin ETF, but not. It is a regular stock, but they hold over 550,000 Bitcoin, meaning when the price of Bitcoin goes crazy, the value of Strategy goes up because it holds the commodity of Bitcoin. And so that has a really big impact on this ETF as well, and the implied volatility of Bitcoin on how big the dividends are. So we're going to get into all of these details and more. If you want the full video breakdown on MSTR, I'll link a video at the end of this one to my smaller channel where I talk about the common stocks and a couple of high yielding dividend stocks over there as well, for those of you that might be interested. I did a deep dive onto MSTR and it was pretty good. So we're going to see exactly how much money we need to retire on MSTY and if it's even feasible based off the recent history of the fund. But first, let's see what MSTY is and what the current yield is according to the YieldMax website. As always, there is a high degree of risk with these ETFs. That's what YieldMax has on, I think, literally every ETF on their website. We can also see that it has a distribution rate of 133%. Now, if you don't know what a dividend yield is versus a distribution rate, well, a distribution rate is the same thing as a dividend yield, but they call it a distribution rate for an ETF because it's different than a dividend, which you would get from a normal stock. So that's basically the difference. They're kind of the same thing. I'll probably call it a dividend multiple times in this video because that's what I'm used to, and I call myself a dividend investor, not a distribution investor, because it just doesn't sound as good. Let's be real. So, of course, we're going to break down MSTY. It, of course, doesn't actually own MSTR. That's a big factor as well. They're using options. We will check out the dividends, of course, distributions on Seeking Alpha because I like looking at it on the chart form, but you can get all the info you want from this website. We can see it's an actively managed fund that seeks to generate monthly income by selling and writing call options on MSTR. MSTY pursues a strategy that aims to harvest compelling yields. 133% is pretty compelling, while retaining capped participation in the price gains of MSTR. What that means is if MSTR runs 20% in a day, MSTY will not follow suit. It cannot go toe-to-toe for the returns, and that can be good and it can be bad. It depends on the underlying fund. If you have a very volatile fund, it could mean higher distribution rate, but it could also mean that you're not able to make as much money as if you just purchased MSTR itself. But again, if you're interested in current income versus long-term growth, that shouldn't be a problem. Now, we will talk about the expense ratio. It is 0.99%, which is very high, but not as high as others. I would say it's probably top 70 to 80% of how high they can get. I've seen some go well into the 2s and 3%, so it could be worse, but it is expensive. And if you're on the line of maybe I should invest, maybe I shouldn't, that might be something that pushes you one way or the other. Net assets, though, it is rather large at $4 billion, which is remarkable. Absolutely crazy. I don't think that the total, all the weekly dividend ETFs combined have a net assets or an AUM of $4 billion. So pretty impressive. We're going to jump into our dividend history for this fund and see how much money people are actually making when they hold it. As always, I'm on Seeking Alpha with their dividend chart. We can see this last one was very large at $2.37. And people have been comparing this one a lot to the new weekly payer that also does the same thing, but with leverage on MSTR. ticker MST, which I have a full video breakdown on that one as well. I'll link that at the end of the video for those that are interested. But the first dividend was a little bit lower at about 33.5 cents compared to what MSTY has been paying out. It will be hard for them to keep up. And now I always make this mistake. MSTY pays 13 times a year. I always say it pays monthly because in my head that makes sense, but it doesn't. It pays 13 times every single year. So I appreciate those of you in the comments that fix that and make that correction. It is hard to incorporate that because all of our dividend calculators, our reinvestment calculators only have monthly. So you could actually say it's going to be a little bit better than the numbers that we're going to pull up, which I like to say. I like to say like kind of the not worst case scenario, but I don't like to overhype it, right? I always like to undersell. So we can see the distributions at one point in 2024, they were going insane. They were up to $4, almost $4.50, and they trailed back down. The most recent ones have been a little bit less at $1.30, and we jumped up to $2 and almost 40 cents, which is great. I like the consistency of inconsistency. I will say it's all over the map, but that's okay. If you're not living on this for retirement, that's fine. You like when you have a good month, and if you are living on it with retirement and you just say the worst case scenario is what you plan for, then when you get a higher dividend or even twice the size, 3 times the size, you have some extra bonus money to spend, which I think would be fun. We can also see here, the dividend yield 130%, which is absolutely crazy, and the annual payout is $30, even though the price of the ETF is only $23. So that is wild. Let's jump into the drip calculator and I'll show you guys just how crazy these distributions are. We can see I have dividendchannel.com. I'm using this for the drip calculator. And had we invested our $10,000 in the beginning of this year, January 1, 2025, here's how the returns would be. We can see there was a red part where it was down almost 20% when Bitcoin was falling, and now it's absolutely launched back up. Total return, 26.35%. Meaning you'd get roughly a 70% annualized gain with DRIP on. Now, I am a dividend reinvestment investor. That's what DRIP stands for. Means when you get paid a dividend or a distribution, you immediately purchase more of the stock that you were paid from. But when it comes to retirement, we're not going to be using DRIP because we want to live off of that money. And so that's how the calculation, it's going to reflect that. With dividend reinvestment not on, still very solid. Total return would be just under 20%, and your annualized gain would be 52%, which is absolutely remarkable. And I want to know what you guys think. I definitely know there's a lot of MSTY fans. Like I said, I am biased. I did buy more today before the market closed, and I've been happy with it. I've been very impressed by it. Between MSTY and ULTY, those two are my favorites right now. YieldMax is up there as well. But what is your favorite ETF currently? I'm really curious. I like knowing what everyone's buying, what everyone's holding. There's also some wild cards that have been trading on Bitcoin like BITO and BTCI, which I might be scooping up, especially if Bitcoin goes into a little bit of a lull. But we have all the information we need. Let's see how much MSTY do we need to live off of in retirement. This is going to get a little bit complicated, but stick with me. So how I factored everything in, we have MSTY plugged in, it pays monthly, and DRIP is off because we want to make exactly the money we need to retire, aka we're going to be spending it, not reinvesting it. So the initial annual dividend yield is 105.78%. I did this by calculating all of the dividends we've received so far this year, dividing them by the number of total paid out, which is 5, and then factoring that in to the division of the current price of MSTY. If that doesn't make sense, I'm sorry. The math always makes sense in my head, and then when I try to explain it, it's a little bit more complicated. But there's something we have to factor in as well. The price is down roughly 13%. So what I'm going to do is, instead of having the actual decrease in here because the calculator can't factor in a negative price return, we are going to factor that into how much money we actually need for to make the money to survive, right? So we're going to need about $88,000. The average for living in the US currently, inflation will be different, who knows when, but currently you need roughly $70,000. So we're going to offset that. We're going to add $18,000 more because that's roughly what we would lose in price depreciation. So again, that's how I'm factoring it in. Let me know if that makes sense. So we can see 10 shares. 10 shares, it's $230, and you would make $244 every single year. But again, we need to make yearly quite a bit. $88,000. We can bump it up 100 shares, and still you're only going to get $2,400. Then we can keep going. 1,000 shares, now we're going to get $24,000. So we're going to need quite a bit more than this. If we double this, let's do 2,000 shares. How much money will 2,000 shares get us? That's pretty crazy. 2,000 shares or a $46,000 investment is going to make us almost $49,000 a year, which is a ton, but not enough. If we keep running this up and we do 3,000, are we going to get anywhere close? We are, but we need a little more. Even with 3,000, you're a $70,000 investment, and your total dividend payments over that year would be 73,000, which would be good if we didn't have to factor in the deficit that we've seen with the ETF falling. And I will say I'm only factoring that in because that's what we've seen year to date. A lot of the times you can buy MSTY at a low and not have to worry about the price drop because we've seen it range from like $20 to $45. So you could make an absolute insane return on your money if you timed it correctly. But I didn't because I just bought it, even though it is still relatively cheap. So 3,500 shares. Is that what we need? Close. We need a little more. I think 3,600 is going to do it. 3,600, a little more. 3,650. 3,650. And you can do this backwards. I'm doing it the slow way because I like to work our way up and build some suspense, of course. You could factor all of this in with a calculation and get the exact number. But I like doing it this way. So we'd have a little bit of extra money in this case, where if you wanted to make $70,000 a year and not lose out on your initial investment, you wanted to recoup those losses, you would have to invest $84,000 into ticker MSTY. That would get you 3,650 shares, and your dividends would be about $90,000 a year. Again, you are going to have to reinvest that $18,000 to recoup those losses, but still, that's a phenomenal amount of money, and I'm not surprised. We've seen this thing do extremely well. And I'm not saying that MSTY will perform this way forever. We've seen a record couple of years for Bitcoin, and that definitely plays a big role in it. But I want to know your guys' thoughts. Are we in MSTY long term? Are we just holding it until it starts to drop? What are we doing with this one? Because again, I did buy more, and I'm curious as to what the group think is. Even though it might not be the best way to be peer pressured into buying or selling stocks, I'm sure it isn't. I still want to know what you guys think about this ETF. So I appreciate all that you guys have done for the channel. You guys have been phenomenal, liking and subscribing. The videos have been doing extremely well. If you want more MSTY content, if you want more information on high yielding stocks and ETFs, again, don't forget to like and to subscribe. And as always, if you need a broker that has all these crazy weekly paying dividend ETFs, monthly paying, check out my Moomoo link down below. If you fund the account, you get some crazy bonuses like 8% on your uninvested cash, which is crazy. That's higher than banks by like 100. So I hope you guys enjoy. If you found this video entertaining, you're going to like these that are popping up on your screen right now, including the one on the new weekly paying MSTR ETF, ticker MST.